asset products like that than I would. I'm more of a financial person on the equity side. And honestly, but to support what they're talking about, I wrote a white paper called the $340 trillion problem, which is referring to the debt in that's unpayable, right? Our entire financial system is based on this belief that that debt is risk-free, right? That doesn't make any sense. I mean, unpayable debt is risk-free. So we've been indoctrinated in this system, believing that debt is risk-free, but we're seeing that the government is able to print money from thin air. Money supply is growing at least 8% a year. It's been more recently. Interest rates are only 4%, so you've got a negative interest rate, which is one of the points I try to make in the movie. When interest rates go negative, and I'm referring to real terms, all assets are worth infinite. The professor in the movie will say, my coffee's worth infinite, my desk is worth infinite, my whiteboard's worth infinite. Does that make sense? So you're living in a system that doesn't make sense, right? And so digital products like Bitcoin are an alternative to that. So you're basically, what I believe that you need to do is, I believe you're sitting in a sovereign debt crisis, right? That's what Money Game is. That's what that's what we're basically discussing in Money Game. I mean, at the end of the day, it's a real movie. It's rated R. So there's a storyline and all that. What we're really trying to show people is that nothing in financial markets makes sense. Once you realize that nothing makes sense, then you've got to find alternatives. And these guys on my panel will understand the basics of that a lot better than I would. But that's the overall environment that you're living in.
Great. And one more question, taking advantage of your experience at so many years at Fidelity, what is the thoughts of your colleagues around DATs and Bitcoin? Is the same as you, or do you think they're still very skeptical?
Right. Most people in markets still believe markets are efficient, right? The opening quote in Money Game is, the task is not to see what no one else sees, but to think what no one else has thought about that which everybody sees. Because we're seeing things that don't make sense. GameStop, all these meme stocks going to trading at crazy valuations. Boeing Corp, which has lost 10 billion a year for the last 10 years. Since 2018, they lose 10 billion a year. If I asked a 10-year-old, how much would you pay to lose 10 billion a year? The 10-year-old would laugh at you and say zero. But financial professionals can't figure it out, right? So what they're doing is they're pointing. So in Money Game, we're talking about the biggest groupthink in financial markets history. Professor Gardner will raise the book, The Efficient Market Thesis. He laughs. He throws it in the trash. He says smart people thought the world was flat once too. So I believe what you're stuck in is this massive groupthink that markets are efficient. Not only are markets not efficient, they're broken, and the entire system is misallocating resources. And that's the point that I'm trying to drive home. And so where should an investor go? Digital assets, gold, real assets. And that's where I think we should be. That's where I think people should be investing in, and not play this money game, because I believe the whole system has shifted from an investing system to a financing system. Like, there is no cash flow return from 35% of U.S. companies are zombie corps that can't pay their interest. They're not making their money from selling planes or cars. Think of Tesla, right? Or software. They're making their money from selling shares to the passives. That's where they make money. So I believe the entire system is flipped on its head. And so you've got to be looking for alternatives to that. And that's why I think digital assets make sense, and real hard assets, where there's proof of work.
Amazing. Yeah, and I checked the trailer for Money Game. Awesome movie. Hope to watch one day. And Bill, passing the ball to you, what is your thoughts about digital asset treasuries? Companies, and are you also bullish around this kind of initiative, or do you think maybe we should be cautious here?
Well, I first of all, Chris, if you're making another movie and you need a romantic male lead, and you can't get Brad Pitt, I am available. I charge very little. I like to get paid weekly, very weekly. I'm a former stand-up comic from New York.
Oh, that's perfect.
First of all, I think we need to define in simple terms, because I don't know who's listening to this, is what is a debt? What is a debt? A debt is a treasury, a treasure chest. but instead of gold or silver, they're digital assets. One of the common ones might be Solana, which is a cryptocurrency. I don't know how sophisticated the audience is. So the idea that this company, and MicroStrategy is a great one. They do Bitcoin. They were doing a whole bunch of other stuff, and they said, we're done. We're just going to buy Bitcoin. We're done. And we'll make money that way. And there's a lot of copycats trying to do it in Ethereum, Solana, Ripple. So we'll buy the Ripple, and then you can buy our stock. So why does that matter? Why would anyone do that? Well, let's take my mom. My mom wants to go to Charles Schwab and buy stock. She does not want to get a wallet. She does not want to deal with Coinbase. She does not understand these 7 words or these 12 words or these 24 words, and she loses her password. She doesn't want to swap. And a digital asset treasury can do things that the token itself can't. For example, if I bought Soulmate, which is one of the DATs for Solana, they can stake it and pay that to me in dividends. So they can lend their tokens back to the network and pay me dividends. The other thing they can do is they can invest their Solana in projects which make money and pay me dividends. And I can get in and out, not 24/7 because they're traded on exchanges, but I can get out business days within 30 seconds. You're counting when you do a digital asset treasury, you're counting on something. You're counting on the person, if we're crypto relevant, the person running the DAT has cash to buy the token when it drops. Solana was over $200 a few weeks ago. Now it dropped to 134. I think it's heading to 140. Wouldn't it be great if Soulmate, who I invested in, had $1 billion in cash to buy low? That's the bet we're all making if we're crypto native. If we're crypto native, I'll just go to Coinbase. I'll buy all the Solana I want. No fund managers. The fees might be a little higher even on the Solana trade. So that's what we do. Am I bullish? Yes. Because digital asset treasuries have existed before crypto. I mean, one of my favorite ones was iTunes. That's a digital asset. It's a digital song. I can rent it or own it for 99 cents or $1.25, right? Now I can do iTunes. I can rent every song I want for $25 a month. They're holding it. They're not exclusively holding it, just like MicroStrategy isn't exclusively holding Bitcoin. That model, I think, is the future. And I think we're sitting in a place, like Chris mentioned, where kind of finance has to be restructured on its head.
100%. So look at the structures of markets in terms of bond markets, $340 trillion. The stock market is probably,
and I remember when that was a lot of money.
Well, the stock market is probably 100 trillion, right? All of crypto is at the most 4 trillion, right? The gold market is probably 20 trillion, right? So if you believe what I believe, that there's $340 trillion the entire system is based on, has to somehow flow from that 300 trillion, because if you believe that bonds are no longer payable, well, then they're worthless.
Mm-hmm.
Right? And so that money has to now squeeze into the stock market, into the gold market, into the $4 trillion crypto market, and the $1 trillion silver market. So I believe what you're sitting is a sovereign debt crisis, right? They're artificially here's the money game. As interest rates fall, asset prices rise, mm-hmm. right? So Professor Gardner will say all of finance is based on one formula: the value of $1 paid annually. So $1 paid annually, all you need to know is the interest rate. If interest rates are 10%, it's 1 divided by 10%, it's $10. If interest rates fall to 1%, now it's $100. During the movie, interest rates were 0.66, so it's $152. Professor Gardner say, who here is willing to give me $152 if I give you $1 for the rest of your life? Dumbest kid in the class says, hell no, we'd all be dead by the time we broke even. Professor Gardner turns to him and says, correct. That's the point. So when you're looking at valuations in stocks, they don't make sense. Then he says when interest rates go negative, all assets are worth infinite, because as interest rates fall, asset prices rise. That's the money game. That's the Fed manipulating markets, because the
market value of a stock makes absolutely no sense. There's so much sentiment involved, and what these children, and we're talking children, 16, 18, 19 years old, taught us about AMC stock is they can put enough hype behind a stock, which really had very little value.
No
It has
value.
tickers that lose money, right? I mean,
It's a
it's got,
zombie corp, right?
yeah, and a zombie corp is, by the way, a great term. But they got sentiment going.
Mm.
And the stock was $80. If it's $80, it's $80. I go to Charles Schwab, that's what it costs.
So there's
These are the multiples. These are the multiples that are basically punted by the companies. And Chris, your point, a lot of that stock market valuation is based on cash flows that currently cannot be explained.
Mhm.
And so it's the promise of the future, it's the confidence, the sentiment in management's ability to create new growth based on their past performance. That is a problem because, and I think ultimately what this comes back to from a crypto point of view and a digital asset treasury point of view is we have a collateral crisis. I live between real gold and digital gold, and we see sovereigns buying up bullion. We can see that on the COMEX exchange, gold is completely oversubscribed. So when someone actually wants that ounce, 100 other people are standing in line to get that ounce. And so if you believe from a crypto perspective, and again, we can probably get to it, the difference between the Bitcoin and the Solana and the others is, I'm a micro strategy follower in a big way, and this is the company that we're actually going to be taking public in the UK. Is Bitcoin is it is a finite reserve, right? It is there's a lot of scarcity. You got to take a view that the price is going to be going up forever, and if you take that view, just like physical gold as a store of value and the collateral of last resort, this is digital gold, and people are dying to get hold of it because they can prove the provenance. A company, I mean, the UK, I'm based in the US, but in the UK is still very nascent. A company went from a $4 million company to a 240 million pound company through an IPO because of the massive demand for access to this kind of financial product.
Mm-hmm. Well, exactly. I mean, look at Palantir, which has huge government contracts, unfortunately is owned by several people in our government. They are their shareholders, which is very, very sad. That's a whole other discussion. But the PE is like 657 to 1. It's just crazy.
Yeah, and the S&P,
Citibank is 10 to 1. Citibank's 12 to 1.
So when you talk about Palantir, you should notice this is so I don't believe anyone's pricing stocks anymore, and that's the biggest flag that's out there. 85% of the market now is passive and quant. The passives won not because they're smart, but because they have no. I'm sorry, the quants won, but not because they're smart, but because they have no morals. It's moral hazard, right?
Mm-hmm.
If anyone asked you here, Palantir is a perfect example. So at today's run, so last year so the company's what, $480 billion company, something like that. Last year they made $1 billion in earnings, right? Last quarter they gave away 25 billion.
Yeah.
So why is this happening? And to me, it's because it's the ecosystem change. I believe what's happening is that Palantir is going up not because of fundamentals, but because they're issuing shares.
Yes.
Right. So the more you issue shares, the more the passives are forced to buy. They have no option. So they buy at the quarter because they have to match the index. So whenever they issue shares, it's actually causing demand because the ecosystem of capitalism is broken, which is what the movie is about, which is what my white paper is about. Issuing shares actually sends your market cap up at the quarter. So this quarter, they issued $25 billion in shares, and their total profit over the last year was $1 billion. So in order to get back the money that you gave this quarter, it'll take you 25 years. So I think
executive bonuses are paid on that. That's why, because it's earnings per share. So they're
it's not even earnings per share. The more they issue shares, the more it forces the passive to buy. Because think about it, in the passive world, if you talk into Grok or ChatGPT and you say, if 100% of the world is passive, if I issued shares, shouldn't that send the market cap up? Because doesn't it force the passives to buy because they have to match the index?